India will be a sweet spot for investing where you would have positive trade relations as a country, as well as you would want to invest into the manufacturing. FIIs coming and investing heavily into India is inevitable, and that is definitely going to happen. It might take 3 months, it might take 6 months. I don't think there's any challenge to it, and that will ensure that the markets will rise like anything. India has manufacturing as well as consumption. भाई ज़्यादा से ज़्यादा क्या होगा? आपके 100 रुपए zero हो सकते हैं. But the upside is unlimited. I think markets are very productive assets. Rather than keeping your money in cash or rather than keeping your money idle in unproductive assets, I think if we are able to channelize money into the markets for a long term, and in terms of the economy it is good, in terms of generating higher returns it is good, right? So if you look at ethical funds in India, there are only a couple of ethical mutual funds. Mr. Trump would either be written in golden words or in black words, right? Such kind of a tariff war the markets have not seen. A lot of people used to come to us and say that, hey, I do not want to invest in sin stocks. What we are doing in the Shariah Fund is similar to what we are doing otherwise. If the world is going to end, it is going to end, right? If the world is going to continue, I think it is a great time to invest in Indian markets.
When facts change, I change my mind. John Maynard Keynes' this statement rings quite true right now. With a turbulent geopolitical situation at play, alongside tariff mayhem and back-to-back flip-flopping policy stances, making estimations around what's coming ahead has become an increasingly difficult task. For investors, it's like playing chess in an earthquake because there's so much happening. We will be diving into all of this today, but beyond this chaos, we will also explore a very interesting thematic fund. Have you ever heard of Sharia-compliant fund? Now, for sure, it might sound philosophical and religious at first, but what happens when we combine it with the stock market, when we combine it with the concept of profit? It's an interesting contrast. You see, when we think about investing, the first thing that comes to our mind is profit. But what happens to our ethics? What happens to our belief when money is on the table? We have a very special guest with us today who manages such kind of fund. And the surprising part, it's not just limited to one religion or philosophy or belief. Welcome to the third episode of Bulls in Bazaar, and today we have with us Mr. Divam Sharma, the co-founder of Green Portfolios. Welcome to the show, sir.
Thank you so much.
And thank you so much for coming, actually, because it's perhaps not a very great time going on for T Street. It seems like we are in a very chaotic time. With Trump imposing tariffs on nations, we might see another full-fledged trade war. And considering China's tit-for-tat retaliatory play, some are even saying that we might already be in one. So uncertainty is high, volatility is high. How are you seeing the current market movement?
See, definitely tricky times. This is something which we have not seen in the last 100-200 years at least. And something new, whenever it comes, it actually creates volatility in the markets, and it ensures that there are corrections in the markets. So this is a tricky situation, definitely. Every day we wake up, we pray that, hey, Trump should not lose his mind. Trump should not lose his mind today. So we are all praying for him to be sane all this time. But if you look at it, I think it is pretty interesting times for India as well, right? So if you look at how it is a direct war primarily between China and US. And everybody, if you talk about in the market, are thinking that, hey, this is going to be positive for India, right? So ultimately, we are going to be beneficiaries in terms of being a country which has manufacturing assets. And we being primarily focused as a fund house, we being primarily focused on manufacturing since very inception, we are looking at it very positively. So primarily, like, you cannot time the market, you cannot catch falling knives, but you should look at it as an opportunity, because these are times when you get very good assets for cheap, right? And you are actually getting good assets where there is good potential growth in the future, and you are getting comfortable valuations. So definitely, whenever you are investing in the markets, even if you hold one stock, at all times you carry risk. Sometimes the risk is high, sometimes the risk is low, right? At these times the risk is slightly higher, but a lot of it is panning out. Definitely, if the things get worsened, there could be a lot of impact on India on the short term. But I think if you look at it from 6 months down, 12 months down, or 24 months down, it should be a great time. When we see in hindsight, it should be a great time for anyone who is doing investments in India.
So patience is the key here for investors.
Exactly.
So coming to your AUM, you have a very interesting theme-based fund, the Green Ethical Portfolio or the Shariah Fund. Can you give our viewers some brief around how it works?
See, as I told you that we work very closely with our investors. We keep on talking to them, trying and understanding what requirements they have. So ethical portfolio, if you look at these, there are a certain set of people who have certain beliefs, but they still want to invest in the markets. And I think markets are very productive assets. Rather than keeping your money in cash, or rather than keeping your money idle in unproductive assets, I think if we are able to channelize money into the markets for a long term, and in terms of the economy, it is good. In terms of generating higher returns, it is good, right? So if you look at ethical funds in India, there are only a couple of ethical mutual funds, but in terms of PMS participating in the broader markets, there was none. So we keep on evaluating what type of products we should offer, and should be very niche. So we found out that opportunity, and we talked to a few investors, and we then we identified that hey, this is a very big opportunity, because a lot of people want to invest in the markets. They want to participate in the growth story of the economy, but they are not able to do that as they do not have an opportunity. As well as some investors were doing it in beyond the ethical funds, who have those practice or belief, but they were not. But given an opportunity, they would want to shift to those areas. So ethical fund restricts a certain sectors. Like there are certain sectors which are prohibitive to invest. So it restricts certain sectors. So there are 2-3 like criteria, right? So there is a sectoral criteria where there are certain sectors which are restricted and should not be invested in. And then there are certain ratios, financial ratios, which are looked at while investing, right? Then basis that there is a screening of companies, right? Some companies are compliant, some companies are not compliant. Then after that, even despite being compliant, some companies might have income from, say, interest or traditional financial systems. So those income are purified through donating the money, right? So we as fund managers, we do our research as we are doing for everyone. There is an institution which gives us that scholarly advice on which stocks are compliant and not compliant. We are partnered with them exclusively. And basis that we provide a portfolio of compliant stocks for that set of belief. Right, and basis that, like at the end of the year, we provide a donation or a dividend purification or a purification ratio where you can like donate that kind of like money which was not earned as per the principles, and you can purify your income. So this product has done wonders for us. A lot of people, a lot of Indians who used to live in Middle East or other countries and earning very well, they did not find opportunities to invest in India. But now we are getting people to get back that money to India to invest. Right? A lot of money is being channelized from unproductive assets to productive assets. So, and that too, we are participating in the broader markets, right? We are giving them opportunity to like participate across the markets, right? Otherwise, a few of the funds that were there, they were only large caps, right? So I think ethical belief is could be for anyone, right? It could be for Jains, it could be for Muslims, it could be for a lot of other people, right? It is on your belief. A lot of people, in fact, a lot of people who are like Agarwals or Baniyas also used to come to us and say that, hey, I do not want to invest in sin stocks. I do not want to invest in non-vegetarian stocks. So everybody has beliefs, right? But we as market participants, our thought process has always been that, hey, how do we ensure more of participation and how do we ensure more of financial independence? That's where, if you look at as a fund house, what we are doing, we are very closely working with our investors and trying then and understanding their needs.
So what is the average rate of return of Sharia fund as compared to other non-Sharia funds?
See, we have significantly outperformed. If you look at other funds, we lot of our investors, you talk with our investors also, they come and thank us that, hey, you have given us this opportunity, right? And if you look at the alpha that we have created versus other fund, it would be double than what they are generating, right? So and these are markets, right? So it might be down or up, but what I'm trying to say, at least double kind of a alpha is what we are generating to the other funds that are available. So this what we are not only giving that opportunity, but we are also trying to do justice with that. So it is our traditional research that we do, and we are topping up with the rules that are there or the compliant stocks that are there.
So what kind of sectoral stocks do you actually focus on in the Sharia fund?
What we are doing in the Sharia fund is similar to what we are doing otherwise, right? But there is just that there are certain set of compliant companies or non-compliant companies we are taking off from the portfolio and investing in the rest. So it is the same philosophy, same thought process, but there is a filtration other than the filtration that we do fundamentally.
Okay, so any top stocks, not stocks, but sectors that you focus on?
So top sectors, as I said, we have been focusing on a lot of manufacturing plays. And we like pharma, we like chemicals, we like auto components, we like defense, we like electronics. So a lot of manufacturing focus is there in our thesis. But the primary core where we are focusing, if you say one word, I would say manufacturing, right? So I think that is the space where you would find very simple businesses, but very scalable businesses coming at very low valuations. So you'd find a lot of great companies which could do well from here. So we are fairly diversified across 8-10 sectors, but the core theme, if you would say, would be manufacturing.
So stock markets, at the end of the day, it's about generating profits. And even if I take a bit of religious perspective, isn't it unethical to take interest? I mean, correct me if I'm wrong, but how do you maintain this thin balance of staying ethical without compromising on returns?
See, it is like, our investment philosophy is the same. We do not deviate from our investment philosophy. We have seen different market cycles. There are times where versus the markets we have not done well. There are times when versus the markets we have done exceedingly well. But we believe that there was that ad, right? Like when you're standing in a queue, that queue is not moving, and then you move to the other queue and that queue starts moving, right? So ultimately you have to, if there is no fundamental impairment or a complete shift in philosophy that you are provocating, you cannot move with the market movement. So your philosophy has to be the same, right? We keep our philosophy as consistent. Be ethical fund or other funds, the philosophy is the same, right? It's the same stocks, it's the same screening process that we do fundamentally. But on top of it, there are certain stocks which certain sect of people would not want to invest in. There are certain sin stocks, there are certain other stocks which are certain people do not want to invest in. So we take them out of the portfolio or we do not invest in that. But the criteria or the overall broader theme or the broader space that where we are working is the same, right? So it is not difficult at all. If we are making alpha in the general portfolio, the ethical portfolio will also make alpha because it is almost the same stocks minus a few stocks.
So can you give our viewers some number, like with what AUM you started and where does it stand now?
So we started off with like a few friend and family kind of investments back in 2018. And it like when we started, it was just 20 crores odd. Today, so like before the market fall, we were sitting at 950 crores AUM and 300 crores AUA. After the market fall, I would say we are sitting at around 700 crores AUM, around 250 crores AUA. So somewhere around overall around 1000 crores of assets is what we manage. And we are also starting off with an AIF where we have certain commitments. And what I believe is that, hey, the kind of sticky investors that we have, the kind of top-ups that we are getting, and the kind of valuations we are at, right? So this business, if you look at journey from 0 to 100 is the toughest. 100 to 500 is slightly easy. 500 to 1000 is slightly more easy. Then it gets easier, right? Because the compounding starts to happen, right? It's a very sticky business. A lot of investors that are with you, right? They who have seen cycles, made money, they are with you. So I think very very soon you would see us like multiplying from here. Like we are targeting like say around 2 to 3,000 crores kind of an AUM over the next 1 to 2 years. The kind of valuations we are sitting at, the kind of the top-ups that we have gotten, the cash that we have deployed at these valuations, we are very confident of that.
So if I talk about foreign investors, the banners of unpredictability are quite high. Even during the last MPC meet, we saw RBI governor acknowledge the fact that global uncertainties remain high. So in all this macro turbulence, where do you see foreign investors, FIIs, heading to?
See, I was looking at a fact. We were looking at MSCI index just recently. So around COVID, India's weight on MSCI index was somewhere around 8%. And today, if you look at MSCI index, we are sitting somewhere around 20%. So at this point in time, if you look at FIIs, they do not have an option other than India, which is a large economy, which is a growing economy, to invest, right? So it is clearly visible that they cannot, with the trade war and with the kind of uncertainty between US and China, you cannot increasingly invest in China, and you will have to diversify. And India, even if you look at March, India's weight on the MSCI index increased by almost 0.8 bips. So we are going to see increase in the investments of FIIs in India. So and even if you keep it aside, why were FIIs going out of India in the first place, right? FIIs were going out of India because they felt that the market are expensive. They had other options that, hey, earlier what used to happen, like you have India is looking expensive, hey, let's move to China. Hey, China is looking expensive, hey, let's move to third country, let's move to Brazil. So now it is more of a realignment of the global trade, where the globalization is moving towards bilateral trade agreements. And what this is going to do is you are going to invest in nations where primarily you have bilateral trade agreements with. And if you look at US, which is the biggest FII investor, you would have more alignment towards countries like India. Even if you look at other countries also, like India will be a sweet spot for investing, where you would have positive trade relations as a country, as well as you would want to invest into the manufacturing. So if you look at this overall situation, I think this is very positive for the FIIs. Even if you look at yesterday's numbers on the FIIs were invested heavily on cash segment as well as F&O. So I think the valuations have corrected. The situation is such that where you have to actually participate in India. The FIIs coming and investing heavily into India is inevitable, and that is definitely going to happen. It might take 3 months, it might take 6 months of volatility and uncertainty, where the FIIs might hold back their horses. But that is, I don't think there's any challenge to it, and that will ensure that the markets will rise like anything. So, in fact, we are very positive on this opportunity, and we think that the market should rise sooner than later, as we announce the bilateral trade agreement with US, we should see more of FIIs coming in and more of markets starting to rise, and the second half should be very good for the markets, we think.
Even if we believe in India's growth story, which seems quite optimistic, markets at the end of the day are moody creatures. Do you think at some level, market sentiment has started to outweigh technicals and fundamentals?
See, definitely yes. If you look at the number of the numbers that are coming in mutual funds, the participants, a lot of participants have shied away from the markets of the last few days in particular. Definitely the sentiments have taken a center stage, and this is what happens, right? The retail investors in particular, when everything is going good, they would be the biggest buyers in the market, and when everything goes bad, they would be the biggest, they would go out of the market or they would not participate. I think it should be the contrary, right? For we as fund managers also, we try and educate our investors, where we talk to them that, hey, these are the times when you invest, right? These are opportunities which you get in 5 years, 7 years, right? Like last opportunity we got in COVID was the opportunity which everybody repents, right? If I would have bought this thing, I would have made this much money. So these are times when the investments that you do would make most of the money, right? Definitely the fear is at the highest at this point in time. The technicals and everything else have taken a backstage, right? Momentum stocks are not doing that well, and people are looking on Trump news on a daily basis than looking at technicals at this point in time. But I think if the world is going to end, it is going to end, right? If the world is going to continue, I think it is a great time to invest in Indian markets, considering the kind of manufacturing assets that we have and considering the kind of consumption that we have. If you look at US, they are consumers. If you look at China, they are manufacturers. But India has both, right? India has manufacturing as well as consumption. So yes, the fear is there, but we as investor, if you look at it's a lot of psychological aspect that comes into play while investing, right? So when you look at it from that angle, I think this is a wonderful time to invest. Yes, you cannot catch falling knives, but you can do a staggered investments, and that's what retail investors or even HNI investors should do at this point in time. And that's what we are seeing from talking to a lot of HNI investors as well. A lot of HNI investors, when we talk to them, they are in fact topping up their investments. So I think that that thing is very positive as a development, right? If you look at 5 years back or 10 years back, when the markets were not that deeply penetrated, whenever the markets used to fall, it were the FIIs who used to command the markets. Now FIIs are on the backstage, and we who understand the economy, even the corporates, they are on the center stage, right? So even despite short term, there could be some sort of a uncertainty or apprehension amongst the investors, or fear amongst the investors. I think people who are deep pockets, people who understand the markets, now have seen the cycles, they are very positive on this opportunity, and we are seeing that kind of inflows also in our fund in these times.
Okay, so fear often takes the better of investors. Just a casual question at hand. How do you convince retail investors or common investors कि नहीं, डरना नहीं है, trust the depth of the market, trust the fundamentals? I'm sure it's not an easy task, because as a person who has just entered in the market, I won't deny the fact कि हाँ, डर कभी कभार बैठ जाता है. What if stock जा रहा है and it hits the bottom?
See, देखो मतलब उस ऐसे टाइम पे मतलब आप you have to be very open and with your investors, and उनके आगे सच ही बोल सकते हो आप कुछ और बोल नहीं सकते, है ना? तो मतलब हम तो मतलब इतने भी कैंडिड हो जाते हैं कि भाई ज़्यादा से ज़्यादा क्या होगा, आपके 100 रुपये ज़ीरो हो सकते हैं. बट द ब्यूटी ऑफ द स्टॉक मार्केट इज़ दैट मैक्सिमम थिंग दैट कैन हैपन इज 100 रुपये ज़ीरो हो सकते हैं, एंड दैट इज़ ऑल्सो हाइपोथेटिकल सिचुएशन, राइट? इट इज़ नॉट गोइंग टू गो टू ज़ीरो, राइट? बट द अपसाइड इज़ अनलिमिटेड. right? So you have to be patient. You and that आप कुछ कर नहीं सकते उसमें. अगर आप पेशेंस नहीं है तो आपको मार्केट कभी रिवॉर्ड नहीं करेगा, right? So we do a lot of hand holding with the investors, talk to them, because any investor, even a small investor or a large investor, the money that they are investing is very hard earned for them, right? And it is very important for them. So whatever money they are investing, we work very closely in terms of trying to handhold them in these times, right? Because when everything is rosy, everybody is like super aggressive, but when things turn, people tend to get skeptical, right? And what we have seen is we have seen COVID times, if we see other times when we have handheld people, when they spend 1 year, 2 year, 3 year, and when they go out of that cycle, they become advocates of you. They whenever we meet after that, like people who we have handheld like somewhere around COVID, and they have seen growth after that fall. These people are now whenever they meet, they top up their investments. We meet only over coffee, just chit chatting other stuff. Then the markets, right? Then the actual what is happening in this stock or that. So then it becomes more of a comfort area. So we have to bring those investors in the comfort area. And definitely when you're starting up, you will be more apprehensive, right? So it is a lot of hand holding, and that is very much required. And second thing is that whatever we are investing is, you have to be confident. You are sleeping over that stock. You have to be very confident what you are doing, right? So we are very confident of what we are investing. We are keeping a cushion of valuations. India is a strong economy. The growth is visible, right? You have to give those pointers to your investors and take care of their apprehensions. While you have to talk it out, right? And you have to be very candid and while talking it out.
So, talking about the cyclical slowdown phase witnessed during the second half of last fiscal, how do you see the current market positioning?
See, definitely, if things turn more ugly from here, right? There could be dumping coming in from China. There could be a lot of investors or a lot of consumers could defer their investment decisions or consumption decisions. A lot of people might lose their job. So there could be definitely the sentiments could turn ugly also, right? That we have to be wary of, right? Like these are uncertain times. The market has not seen such kind of a time. Had it been like, say, when war happened, markets had seen wars, right? Like nowadays when war are happening, markets do not move, right? So when COVID happened, market had not seen that kind of a pandemic for ages, right? So then that reacted so much. But when it came out now, pandemics, like some pandemics, small pandemics, were seen and markets did not react, right? So this is a situation which the market, such kind of a tariff war, the markets have not seen, right? So the reaction will be there. The sentiments will go for a toss. There will be volatilities. But what I want to point out is that if the money has to go somewhere, it has to be Indian markets, right? And the kind of trade relations or the overall geopolitical relations that India has created over the years is amazing, right? Like the kind of relations we share with each and every country. Like we're not in bad relations with most of the large producers and consumers and large economies in the world. I think that is going to be very positive. And see, the world is not going to end consuming. The world is not going to end overall, right? It is going to continue. And when it is going to continue, the manufacturers will be there, the consumers will be there, the business will be there. It might be a blip, it might be a fall. Yes, Q1, Q2 results are uncertain, and we feel that that uncertainty in guidance could come up in the Q4 numbers which are being announced. That guidance of negativities might come up in Q1, Q2. But after that, I think it should go very well, right? And what market does is market discount, like market starts reacting before the thing actually happens, right? When the visibility of a bilateral trade agreement would be there, when the visibility of these things getting over would be there, markets would start moving up before that, right? So I think yes, the sentiment could go for a toss. Yes, there could be things could get more ugly from here. But if you look at this, it is an amazing opportunity, right? It is giving you a 3 months, 6 months kind of an opportunity to invest. You might take a staggered approach to invest in this times. What I would also like to point out is that see, valuations have corrected. India's consumption is very strong, right? The kind of middle class population, aspirational population that we have is also again very strong, right? So domestic manufacturers who are going to cut down China imports, domestic manufacturers who are going to get opportunities to export to Europe or US. See, US and Europe are also not going to completely shut their consumption. They are going to continue their consumption, right? It might be 10% fall in their consumption, 20% fall in their consumption, but the rest of the consumption they are going to do. And if they are going to consume, see, China is definitely a large participant in their supplies, but the market share of China should go down and India's market share should go up, right? And that's where India as an economy is also focusing. If you look at the kind of efforts and the kind of lists that are coming out, hey, these are the sectors where we are going to focus for exports, right? There are certain sectors where we have focused over the last few years. If you look at the last 4 or 5 years, we have focused on PLI, we have focused on make in India. There were 22 PLI sectors where we focused, right? We focused on pharma, chemicals, auto components, defense, a lot of sectors where we had know-how, where we were still importing from China. We tried to take that business, and we are now in that times that base has been made, right? And I think that the manufacturing assets that we have, even if US says that, hey, today I'm going to start manufacturing in US only, it is going to take years to create those manufacturing assets, right? But the countries who have manufacturing assets other than China are going to significantly benefit, right? And the valuation of these manufacturing assets should significantly benefit. And I think India has significant manufacturing assets which you cannot easily create over the next 4 or 5 years. So at least for the next 5 years, India should get business and there should be a shift, right? And the consumption is not going to end. It is going to reduce by some points, right? So India should benefit.
How much cash are you holding right now?
See, we started off in September. So we are investor mindset, right? Where when we invest or we reallocate the funds, we think that, hey, if we are getting things for cheap, we will invest. If we are getting things for expensive, we will sell and we might not reallocate. So when we were in September, we were not finding opportunities. So we were sitting at, even in the new allocations, we're sitting at 50% cash, even more than that in certain situations. But as we talk about today, like what happened was then markets started falling. We never knew what Trump is going to do. This is something which is beyond imagination, right? You cannot imagine what Trump is going to do tomorrow, right? So what he did on 2nd April was completely unimagined. So when we saw the market fall, when we saw the market fell like in Jan, Feb, we actually started investing back, right? And we found a lot of opportunities coming for cheap, right? When the markets were 35p, we were investing in mostly average stocks which were 20-21p. When the markets fell, we were investing in 10-12p. We were getting companies at 10-12p, and that was very comfortable. Now we are also getting companies at single digit p. I think so. So we look at stocks, then a lot of noise across the macros, right? So, and I think that has paid us well. So at this point in time, we are primarily more invested than sitting on cash, right? Like we might have 4 or 5% cash, but we are considering the opportunities that we have at this point in time. We are more greedy in terms of buying assets, right? Because the kind of valuation they have come to, if you'll hold them for 1 year or 2 years, you'll definitely going to make huge money, right? These are like times when a lot of valuations have gone down to COVID levels, And we have seen what has happened in 2021, 22 in terms of the kind of returns that people made. So we are more greedy and in terms of our allocation at this point in time, and we are allocating. But in terms of our fresh allocation, like say someone who's topping up their investments, giving us fresh funds, in those cases we are staggering the investments in say 1 to 4-5 months kind of a time horizon, because the situation will keep on evolving and is volatile. But in terms of our existing allocations, we are very much on sitting on stocks.
So are you still betting on small caps?
See, that is where we have made most of the money in our lives, and that is where we want to be, right? I think small caps, mid caps is where you make most of the alpha, but it tests most of your patience and it requires most of your discipline. And we as fund houses, that is our DNA, and that is where we differentiate, right? So definitely we are going to do that. And we continue to like a lot of companies in small and mid cap. I think it's a very stock pickers kind of a market now, right? You have a lot of like if you look at 1 year back, 2 years back, anything and everything was running, right? Even like you had seen a lot of SME companies and a lot of companies which came up with IPO. They had no business model or completely. Someone having a Yamaha dealership, someone having a Atta Chakki coming up with IPOs. So those were different times, right? But you definitely it's a stock pickers market. You have to look at fundamentals. You have to look at red flags. You have to look at valuations. You have to continuously keep on talking to the management, keep on understanding the business cycles, keep on understanding if there is any impairment because of the tariff war or trade war. But you have to I think this is the space where the most of the alpha is going to be made. Second, a lot of manufacturing assets, a niche manufacturing assets, and we tend to like manufacturing assets. We tend to like a lot of assets which are exporting to countries like US. So in fact in our portfolio also we like say someone who is getting orders from Tesla, even if it's a small order, we tend to like those things. So the kind of such kind of manufacturing companies are mostly small cap and mid cap. Ironically, not a lot of large cap are very niche manufacturing assets. So if you want to find good manufacturing assets, a lot of them are small and mid cap. So we definitely are investing in the space, and we are definitely going to continue doing that.
If I talk about the new technologies that are coming in the markets like AI and algo trading, investors seem more active than ever in chasing profit. So are you kind of adopting similar technology, or have you already?
See, adopting technology is very much everybody should do that. AI is again inevitable. That is going to come in everybody's life, and we are also looking at AI for various aspects, like our research aspect, or getting more data points, or for our marketing functions, or a lot of other functions, right? For content creation. So we are looking at AI, leveraging that as an organization. But if you say that we be proactive in terms of just buying and selling basis AI, or just playing momentum, see, that is not our DNA. So we have kept our DNA as investors who are investing in fundamentally strong companies with no red flags, and who are investing for at least 2x, 3x kind of returns. If I'm investing for 10%, 20%, yes, I might play momentum. But if I'm investing for at least 2x, 3x kind of returns, I have to have patience. And I cannot have very high churn ratios, right? So as a portfolio, our churn ratios are not that high. And yes, we are going to continue trying to leverage technology on an ongoing basis for our fundamental research. But in terms of evolving our trading strategy or changing that basis what the markets are doing, I don't think so. Even if you look at the data that came, 95% of the traders are making losses. And I think the 5% are the ones who are long-term investors.
So, talking about the Shariah Fund again, are the fundamentals of a green portfolio and Shariah Fund the same, or is it just the nomenclature that you use?
See, green portfolio, when we created this name has multiple like areas, right? There's a news that came out that, hey, Adani is investing $1 trillion in its green portfolio. See, we got very excited, like Adani is investing $1 trillion. So now green has evolved as as sustainability and other areas as well. But when we started off, we took this name as like markets in green and markets in red. So green signifies positivity, and that's where we started off, right? So in the Sharia Fund, the fundamentals are definitely the same, right? As I said, it's the same philosophy. But Sharia came out, or ethical fund came out just recently, like it's been 1.5 years. But as an organization, we are there since many years now, more than 6 years after the license. So it is particularly like different things, right? So green is for positive growth. In fact, if you correlate, a lot of ethical funds were not giving green returns. So we are trying to bring those green returns into this space.
Very interesting concept, I must say. I think we have reached the end of our podcast. So do you have any kind of advice or message for investors who are probably in pain after Trump's back-to-back move every single day?
So everybody is in the same boat, right? We are in a market where the valuations have significantly corrected, and these type of valuations you rarely get. Our economy is strong. Our financials of the companies that we are investing in or that are available in the market, a lot of companies are very strong. Our consumption is strong. And if you talk about very large funds across or FIIs, they are very bullish on India. So overall, we are sitting in a very good situation. And I think rather than seeing it as a threat or rather than seeing it as a fear, investors should see it as an opportunity and take this opportunity with both hands. Because the world is going to continue, the economy is going to continue, and the consumption is going to continue. There is a realignment, and that realignment is positive for India. So it is great, exciting times. Rather than getting fearful, it should be a positive sentiment that you should carry. And you should invest with a discipline and with a long-term mind frame.
Okay. Thank you so much for giving out your time, sir. Thank you.
Thank you.